One of the best ways to learn about investing is to follow the portfolios of investors you respect. By studying the different investments prominent investors like Buffett makes, it helps us learn and better understand their investment strategy, ultimately improving our own investment skills in the process. That is the goal of this video. So make sure to stick around to the end, as I'm sure there are takeaways that you can apply to your own investing process. And before starting the main part of the video, today's shoutout goes to Suchasmita. Thanks for showing your support towards our channel. For getting a shoutout in my next video. Subscribe to Invest Freak and like this video. I will select a random channel from my subscriber list. Just a matter of weeks ago, Warren Buffett released his annual letter to shareholders. In this letter, Buffett talked about hockey and his business partner, legendary investor Charlie Munger, had, quote, failed investors because they had not been able to find any significant investments to make. As a result, Buffett's company, Berkshire Hathaway, had a pile of cash totaling over $140 billion. Buffett was clear in this letter that he would much rather have that money be invested in great businesses and generating returns for Berkshire Hathaway shareholders instead of just piling up. This had some people even criticizing Buffett as outdated and that he had lost touch with what was going on in the market. This is not the first time Buffett has been called outdated. For those of you who know the game of baseball, Buffett describes the feeling as being a batter and watching pitch by pitch go by and not swinging a hole, while people in the stands are yelling swing, you bum. However, it's interesting just how fast things can change in the investing world. Shortly after proclaiming he failed investors, and just in the past couple of weeks, Berkshire Hathaway has made a series of large investments that have gotten a ton of attention. This includes agreeing to buy insurance company Allegheny ticker symbol Y for $11.6 billion. Allegheny, in many ways, is essentially a much smaller version of Berkshire Hathaway, as the company has insurance operations but also owns other non-insurance companies. Interesting fact. One of those non-insurance companies, and likely the most valuable company that Allegheny owns, makes a Squishmallow toy, which apparently, as I found out in my research for this video, is one of the hottest toys right now. The other sizable investment Buffett made was buying billions of dollars of oil company Occidental Petroleum ticker symbol OXY, including the additional shares Buffett can purchase at a predetermined price from his original investment in Occidental back in 2019. Buffett has the ability to own more than a quarter of all Occidental stock. This leads some people to speculate that he may even be getting ready to buy the entire company and put more of that cash pile to work. Now let's get into looking at Berkshire Hathaway's most recent investment. Recently, it was disclosed that Berkshire Hathaway took an 11.4% stake in the PC and printer company HP, ticker symbol HPQ. This stake was worth roughly $4.2 billion as of the announcement, and is what normally happens when it gets announced that the Oracle of Omaha is buying shares in the company. The stock skyrocketed after the announcement. HP stock was up more than 20% after the investment was announced, and the stock finished the day up around 15%. Just based on the price reaction from the investment being announced. The value of Buffett's stake in the company increased by more than $600 million. HP makes a variety of computing devices, including desktops and laptops for both commercial and consumer use. The company always makes tablets and point-of-sale systems. Point-of-sale systems, or POS for short, is the place where a customer makes a payment for products or services at a store. The company is also well known for its printers, which includes large commercial printers all the way down to the inexpensive printer I have in my own personal office. The company generates around 35% of its revenue from the US, with the remaining 65% from non-US customers. There is another big reason why Buffett would like HP stock share repurchases. Buffett has frequently talked about how powerful share repurchases can be for long-term investors to see their ownership stake in the company increase without the investor having to buy any more shares. That's essentially what HP is doing right now. They have repurchased a whopping 26% of their shares outstanding over the past 2 years. Additionally, management has committed to repurchasing another $4 billion worth of shares over the next year, which works out to around another 10% of the current shares outstanding. Would you invest in HP? Thanks for watching. See you in next video.